Hello people! Welcome to the Fortune Fastlane YouTube channel. Since ancient civilizations all the way to today, gold has been the most trusted currency in the world, and for a good reason. Many experts point out that gold is a great hedge against both political unrest and inflation because of how its low correlation with other asset classes. Gold is considered to be a safe investment that has a low debt-to-asset ratio and low volatility. It also holds a level of value over time that few other investments can match. There are many types of ways in which one can invest in gold, including bullion, such as gold bars, mutual funds, futures, mining companies, and jewelry. If you want more of this content, Fortune Fastlaner, subscribe to the Fortune Fastlane YouTube channel and hit the notification bell. With few exceptions, only bullion, futures, and a few specialty funds offer an opportunity for direct investments in gold. Other investments can derive part of their value from other sources. Gold is a precious metal that still has immense value in these uncertain times. Plus, you can use it as an inflation hedge and portfolio diversifier. If you are considering investing in some gold, a few different options exist for how to go about the purchase. The best way to own gold is to purchase physical gold bars or coins. They can be hard to come by and difficult to store. Gold is one of the most popular assets for diversifying your portfolio. ETFs, mutual funds, and gold futures and options are the three main types of investment vehicles that are available to investors. To get at gold indirectly, you may also want to consider investing in stocks of companies that mine gold. Though the share prices do not follow the value of gold very closely, these companies tend to provide good returns over time. Gold bullion for many people. Gold is best known in the real world as large bars at Fort Knox. In reality, any form of pure or nearly pure gold has been certified for its weight and purity. This includes coins, bars, and other forms of gold of any size. A serial number is commonly attached to gold bars for security purposes. Huge gold bars are impressive, but the large size of these bars make them illiquid. They can be bought and sold for a hefty sum, so extensive research should be done before purchasing one. To get as much liquidity in your gold holdings, invest in smaller size bars and coins over one large bar. If you want to sell some of your bullion holdings, you can't just see off the end of a large bar. Gold coins. For decades, gold coins issued by sovereign governments have been a sought-after purchase for investors. Investors may typically buy them at a premium of about 1% to 5%. But in recent years, that pricing has gone up as high as 10% sometimes. The pros of bullion coins are: prices are easily accessible in global financial publications. The smaller sizes of gold coins provide personalized investment opportunities that are easier to buy and use than larger bars. What determines a reputable dealer? If a dealer is located in a large city, offers their products online, and has online reviews, they should be considered reputable. Older, rare gold coins have what is known as a numismatic value above and beyond the underlying value of the metal. To invest solely in gold, focus on widely circulated coins and leave the rare coins to collectors. Some of the best-known gold coins include the South African Krugerrad, the US Eagle, and the Canadian Maple Leaf. The main issues that can arise with gold bullion creation and adoption are the storage and insurance costs, which in turn create an overall break-even point for the storefront or buyer. These costs can also decrease or increase the value of the investor's assets. Many investors enjoy gold in other forms, such as its value as a monetary silver or as a collectible or investment. Other types of investing may make decisions with larger numbers than bullion and also may not have the same price exposure that bullion has. Gold ETFs and mutual funds. Gold can be a valuable investment for portfolios with large amounts of money to invest. Gold-based exchange-traded funds, ETFs, may be an alternative to buying bars or coins. Each share represents a set amount of gold, such as 10 grams of gold, and they are relatively easy to buy or sell in any brokerage account as well. The annual average expense ratio is typically around 0.57%, which makes these funds much more cost-effective than other investments like mutual funds. Do you want to invest in gold? Investing some of your money in gold bullion through a mutual fund is a good option. Funds specifically focused on gold find it relatively easy to sell their shares to investors, as they are known as having an attractive investment. Investors should be aware that there are only a few of those funds, while most hold assets in a variety of other commodities as well. The major advantages of gold-only mutual funds are diversification among different companies, low cost and low minimum investment required, no individual company research needed, and ease of ownership in a brokerage account or an IRA. Mutual funds are investment pools that invest in blocks of stocks, bonds, exchange-traded funds, and other securities. Commissions on mutual funds can be lower than commissions on individual transactions or distribution from managed or passive index tracking strategies such as ETFs. For the average gold investor, mutual funds and ETFs may be the most suitable option for investing in gold. Gold futures and options. Futures are contracts to buy or sell a given amount of an item on a particular date in the future. For example, we can sell 100 troy ounces of gold for $1,000 per ounce on the settlement date. Futures are standardized and represent a predetermined amount of an asset. As this amount can be large, 100 troy ounces times $1,000 per ounce is equal to $100,000. They are more suitable for experienced investors doing margin requirements that are much lower than standard investments in equity. They come with commissions that are very low, which makes them popular with experienced investors. There may be some contracts settling in dollars or even gold, depending on your intentions when investing. Investors should pay attention to the contract specifications so they don't have to settle for 100 troy ounces of gold at their settlement date. Options are one way of obtaining a futures contract. These give the option owner the right to buy the futures contract at their preset price before they expire. Their downside is that since they're an investment, you will need a larger investment in order to trade them. A futures contract bought in margin will require more capital than your original investment if losses mount quickly. Unlike futures, options allow investors to buy and sell the metal they desire without the added cost of commissions and interest. This makes them a popular alternative to futures investments when managing a lot of money or risk. Gold mining companies. Mining and refining companies will reward investors once gold rises in price. Trading in these types of companies is a great way to profit from rising pricing, while they carry lower risk than other investment methods. Many large gold mining companies have extensive global operations, which helps a business in other ways. Some of them are able to show a profit during times when the demand for gold is stagnant or even falling. They do this by hedging against a fall in the price of gold as a normal part of their business. Gold mining companies may provide a safer way for you to invest in gold than buying it directly. At the same time, the research and selection process can be quite complex, which means it is not feasible for many investors. Gold jewelry. Almost half of the gold production is used for jewelry. As the world's population and wealth increase, the demand for gold will also increase. But when prices rise quickly, buyer preference can be shown to be somewhat price sensitive, with sales declining. A typical markup for buying fine jewelry is anywhere from 300% to 400%. That means if you're selling a diamond at retail price, it's actually worth significantly less than the gold used in its creation. The best place to find gold jewelry is at estate sales or auctions. It's a direct sale and there is no markup. They are challenging to find sometimes, but the process is simple and quick. However, owning jewelry can be quite enjoyable and fulfilling. As an artwork, it has attracted many people. Regarding investments, it's moderately profitable enough. It's not as good as other investment opportunities, but if you're the one who is creating the jewelry, then it would be worth much more. Gold as a diversifier. Because people tend to invest in gold as a hedge against economic storms, the metal has traditionally been subjected to a low correlation with other types of investments. Gold's connection to stock market performance remains low and the price typically moves in the opposite direction versus the dollar. This leads to periods of dollar weakness which could spell more strength for gold prices. Gold has historically shown the ability to buffer economic declines. This can come in handy if you're looking into planning for a possible recession in the near future. The idea of investing in gold as a way to cushion against rough patches for economic growth is being considered due to the shift in US inflation rates that have gone up by nearly a third. This is the last time that it was suggested. Gold has been investing gold, so it's impossible to be left out of the investment options, whether as long-term or shorter-term investments. Larger investors may choose to invest in bullion and store it in secure and dry conditions. This protects the investment but is cost-intensive. ETFs and mutual funds to track gold price offer a reasonable low-cost solution. But because the funds vary in their strategies and expense ratios, it's important to do your research before investing in these shares. Gold mining stocks are another option for exposure, but these stocks don't always track gold's long-term performance closely. Finally, buying jewelry can be exciting but is not likely to generate financial profits. Mutual funds and ETFs are the simplest ways to invest in gold. Each share represents a fixed amount of gold, so they are easy to buy or sell as needed. They are also great for beginners because of their low investment requirements. Gold is a natural product mined from the ground. Despite there being many downsides investing in gold, it's often included in portfolios that want to avoid a number of potential accidents and emergencies, like deflationary or political crises. In general, when bond yields decline, gold prices increase. However, how effective it depends on how well it fits into your overall investment strategy. Gold investors who are looking for direct exposure to the price of gold may want to take a closer look at investing in bullion. There is also a sense of security and comfort with owning a physical asset instead of simply owning shares in a company, such as when paying stock dividends. The downside is that gold typically costs more than stocks and bond prices, so it's more difficult to reach the same investment returns on gold as other investments. If you prefer investing in options and futures that can be bought in margin, this is the way to go. However, there are certain risks that come with this type of investment. Buying futures and options on margin means having a large amount of money tied up in something without knowing how it's going to perform, even though gold is an asset that is closely related to the currency market. While it's true that jewelry is considered an investment, most investors should probably invest in these types of securities instead, as they generally provide safe and easy ways to invest. If you are concerned about inflation, gold offers a safe haven for your investment portfolio. Even though it can be risky in the short term, over the very long term, there's a chance that gold will hold its value. Depending on your own preference and aptitude for risk, you may invest in physical gold stocks, gold ETFs and mutual funds, or speculative futures and options contracts. Regardless of the form of gold that you choose to invest in, most advisors recommend that no more than 10% of your portfolio be allocated to it. Gold carries a lot of risk with it, especially when trading in the gold market. This can make it difficult for investors to build their portfolios without taking on any risk. That's why gold ETFs and mutual funds are your best options for safety, with constant liquidity and deep research into the market. Juan Carlos Artigas, the global head of research for the World Gold Council, says, "Gold is proven to be effective when it comes to diversification. It has low correlations and high liquidity. These qualities are particularly essential for investors. In the past, gold has outperformed stocks and bonds. However, it does not always beat them. Although gold-based assets often come with a portfolio of risk, it's possible to convert them to cash quickly and easily. Not all types of investments correlate with gold. Different markets can react differently to a rise or fall in gold. Gold offers other potential advantages. The stability that gold can bring to a portfolio is one part of what makes it beneficial. Another, the more unique benefit, is that it is generally not highly correlated to other assets, meaning you aren't as vulnerable to volatility when investing in the metal. When the economy is threatened or unstable, investors often retreat to gold. It's a defense stock because it has never been as volatile as equity during periods of high market volatility. Some of the major benefits of gold are its durability, scarcity, and value. However, investing in gold can present different risks and drawbacks. Gold has a long history of being bought and sold at a good profit, but the nature of gold makes it hard to figure out how cheap or expensive it is compared to stocks or other assets. To succeed with a gold investment, an investor must rely on someone else paying more for the metal than they did originally. In contrast, owners of a business can make money from both the rising price of gold and increase earnings from their business. This allows there to be many, more successful methods to invest in gold rather than just one. That's it for this video, Fortune Fastlaner. Remember to subscribe to our channel, and if you feel like we have delivered value, please share this video with one person. That's right, just one person, as a token of your appreciation for the hard work you put into making content that educates and helps you on your mission of building your own fortune. Remember, you can watch video after video, but it isn't until you actually take action that you will start to see results. See you soon.